Hello traders, it's 8:01 a.m. Chicago time, 9:01 Eastern on the 29th of August 2018. It's a Wednesday, actually. Day of the week's flying by. It's Wednesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a mixed bag. Looks like market sentiment is mixed. We have the S&P down a tick, the 10-year up a tick. The leader this morning is crude oil 69.10 on the October contract, up 57 cents or 0.82. The laggard this morning is gold, down $4.20, 0.34%. Really, it's mixed across the board. NASDAQ and Russell are up 10 and 6 basis points. And we're looking at the Euro stocks and the DAX down. It's all mixed up today. So given that yesterday was pretty tight and a mixed bag today, right in that 2,900 area in the S&P, it really is. It's a time to be patient. So that's how things are setting up in terms of sentiment this morning. The releases, we did have GDP annualized come out earlier. We have at 10 o'clock. We have U.S. pending home sales, expecting negative 2.5, prior is negative 4, and then we have crude oil inventories at 10:30 Eastern. Not seeing any speakers and not seeing anything else. So 10 o'clock and 10:30 Eastern today, the interruptions. As far as what we expected yesterday, I want to take a moment and just talk about the last couple of days, and I'm using them as an example. Last couple of days, so if we look at the 27th and we look at the primary scenario, just to give you an idea of what I'm trying to do with these trader bites, the primary scenario is right there in green. Consolidate, pull back, but push higher. Look for at least 28.97 and a quarter. That's the key target. Okay, and then so a push up on a gap up. Yesterday we also had a gap up, but the primary scenario is a pullback. Primary scenario, again green, is a pullback to at least 28.9750, if not to 28.95 and a quarter. Okay, here's what happened on those days. This is the 27th. The pullback was expected to be lower, as I talked about, but we ended up pushing 28.99. 97 was taken earlier. So we pushed up on the 27th, just like the trader bite showed. And then yesterday we swung higher, and then we pulled back right to the area that was expected in the 95. The low is 94 and a quarter. Again, this is what we set up for, right? So this is not to say, hey, I guessed it and it worked out. Look at me. The goal here is to let you know that there is no crystal ball. There's nothing I'm doing here that's not within your tool set. But having a plan, even though the levels may not hit exactly, it didn't stop at exactly 28.95 and a quarter. It went to 28.94 and a quarter. The plan still works, right? So we expect the market to move up given the market narrative, and it moves up, and we expect it to move down, and it moves down. As the primary scenario. It could have been scenario 2, could have been scenario 3. It doesn't matter. But what matters is that we're prepared. So we're not caught off guard. As I mentioned well, I didn't mention it here, but as I mentioned yesterday, I'm not looking for longs. I'm just looking to the short side. So I'm stalking an extension, pull back to mid, extension, pull back to mid, or some other areas, right? Some predefined areas. That's what these stock zones are for. This is so underrated, this way of looking at the market, but it's what most large traders have to learn to do at some point, because despite the fact that you may be using an indicator like CCI or RSI or a MACD or whatever, ultimately taking a mathematical equation or number or outcome that is lagging on its own is likely to test your execution. And so the goal with these trader bites is not to say trade like me, use volume profiles, use my approach. It's not that. You can use your fibs, you can use your whatever, but just make sure you understand the narrative. And that's what I'm covering with you. I'm covering the story, what is happening, what changes are occurring on a day-to-day basis. Every single tick is unique historically. Every day is unique historically in trading. Trading is like people, because it's made up of people, right? So that's the point. The second thing about, well, I already covered what we did on scenario one. It's on the dot. Big things occurred yesterday. One, very tight range, right? Just 10 points, 10 and a quarter points. That's well within the first standard deviation, so it's not really considered unusual, but it's pretty tight. And that's what I talked about yesterday at the end of the Trader Bite, saying this isn't my favorite thing because volatility is going to drop, ranges are going to drop, and volume is going to drop. So yesterday we traded 740,000 contracts, which is off approximately 35% from what we would consider to be the mode of our data set, which is at about 1.1 million contracts still. The second thing to note is yesterday we got stuck at the century figure. The point of control is right on top of the century figure. The point of control is on top of VWAP, the cyan line. It's on top of the mid, the blue line. It's on top of the prior day's close. We only moved the close yesterday, close to close, by 3 ticks. It was the IB area, okay? And so it's really coiled up right now. It's really coiled up. We did gap up and we reverted back. So what that's showing is exhaustion by buyers. That's what we saw yesterday. It's what we expected, but it's what we actually saw. Exhaustion by buyers, and they're not able to hold on. It looks like buyers are stepping in a little bit lower, but overall, the market has run for a bit and it needs a breather. And so what we have is a profile that's balanced. Value area is valid, value area is narrow, and it's, like I said, mid, VWAP, prior day's close, VPOC, and the century figure all on top of each other. Okay, so that's what we had yesterday. So just remember, it's coiled up. It's coiled up coming into today. So we may expect a pop. 1 second.
Just give.
I apologize. Kids are running off to camp. So that's where we are. On the overnight, to continue the story, the overnight doesn't do us any better. The volume overnight's pretty good. 131,000. But the profile's, again, completely Gaussian. And the low of the overnight session is the same as the prior overnight, with a point of control basically being the same as the prior overnight. There's really no capability here from either side to move forward. This is like two, reminds me of the American Civil War or something. Two front lines entrenched and not making a move. That's where we are currently. Not seeing anything on deck for the news. So that's not likely to be the driver for the rest of the week. Tomorrow, not seeing too much moving us as well. We do have some key numbers on Friday. So right now the market is really at rest. Now remember, on this weekend we have Labor Day, the Labor Day holiday here in the U.S., and that's likely to further slow us down. So just remember, be patient. This is not an ideal time, nor the ideal market regime for intraday trading. Keep it tight, y'all. So let's take a look at what we've got. This morning, right on top, we're right on top of yesterday's range. We have a gap zone beneath us. We have new all-time highs above us. And so what we are doing, is we're opening right inside of that balanced area. Expect it to get stuck here. Looking for it to stick this stock zone here at 28.9875, which is yesterday's close as well, or 28.98 half, is likely to be sticky. And unfortunately, it's hard to tell from the configuration that we're in if we're likely to break higher. If so, I expect it to breach, pull back, and then continue higher. And in that case, 29.08 would be my next target. That's scenario 1. And I'm going to build scenario 2 off of that. So it'll be the same, just chop. And then I expect it to test out the prior day's low and then start to work its way through the thin portion of the profile of Monday, the rally day, and then bounce back up at the close. So that's how things are looking currently. Okay, so that's where we are. Good luck today, and hopefully this is helpful to you. I'll catch you tomorrow. Take it easy.